Welcome back to the Investor Professor podcast. This is Dr. Ryan Peckham, and this is episode 142. On today's episode, we're going to take a look at the earnings schedule this week, the economic schedule this week. It's a busy week for the stock market coming up. We're also going to talk about the rotation that seems to be happening over the past couple weeks with small cap stocks outperforming mega cap stocks. And do we think this trend will continue? How it can impact your portfolio? All the political stuff we got going. It is a busy time here in the middle of summer. So get your mind right and let's get to work.
You dropped this.
Welcome back to the show, everybody. Happy end of July to you. Man, it has been a busy couple weeks since Cameron and I recorded that episode together. The market has been just these big gyrations, right? So politically, since we last talked, we had Joe Biden drop out of the presidential race. Looks like Kamala Harris is going to be the nominee for the Democratic Party. So that kind of changes some things. When that happened, we had the Trump trade basically start to reverse. So again, like we've talked about this many times on the show, but it's really difficult to invest right before a presidential election, especially if you're trying to, maybe not be a day trader, but trade off of news because it changes so quickly and so often. And so, for me, this is not really a fun time because you really can't see what's happening. So you can already see traders, people that trade a little bit faster, not long-term investors, starting to kind of move their portfolios around to kind of key off of data. And you got to be real careful that you don't just turn into a gambler based off of that. So, but it's been, for me, good couple of weeks. I want to make a shout out to the Zilli family in New England. Had a nice family vacation, had some delicious lobster, ran a 10-mile road race. And so it was fantastic, and just some great people, a great New England summer spot, and had a lot of fun. And of course, the market knew I was on vacation and decided to be a little wonky. So when you look at kind of the mega cap stocks, they've been struggling the last couple of weeks, and of course they've been going up straight up basically all year. So a little bit of sell-off is kind of warranted. I always think, you have to think about this too, that within the market, there's always money that's moving around. So you have to think about momentum traders, and they're just kind of going after like what's going up, and they kind of move around. So depending on what's hot at the moment, those momentum traders are gonna go. And so right now we've seen this a little bit of a rotation, but to small cap stocks. So small cap stocks, and I thought this would be a good little teaching moment here, what are the different cap levels? When you hear the word caps, when I say small cap, cap stands for capitalization, which is the total amount, the total value of the company. So you'll hear small caps a lot, mid cap, large cap. And so that's basically telling you the size of the company. And now we have a new one, which is mega cap. So small cap, mid cap, large cap, mega cap is kind of the order that it goes. And so, and then you like penny stocks would be nano cap, and you have micro cap, but the big ones are the ones that we're going to focus on today. So a small cap stock, so small capitalization stock, is going to have a market value between $300 million and $2 billion. So when you look at the value of the company, that's how much it's going to be. So if you go to like Yahoo Finance and you look up a company, let's see, I'll just look up Apple. Thought I had one pulled up. So you go to Yahoo Finance and you bring up Apple, and the first thing you're going to see under summary on the far left is going to be previous close. And then right next to that, you're going to see the word market cap, which is going to tell you the entire value of the company. So right now, Apple's worth $3.34 trillion. So obviously a mega cap. So again, small caps are going to be between 300 million and 2 billion. And then mid cap stocks are going to be 2 billion to 10 billion. And then large cap stocks are going to be anything above 10 billion, was what it used to be, that anything above that was a large cap stock. And now you have a mega cap stock, which there's still no like academic definition really for this, but it's somewhere around 200 billion and above. So that's going to be, typically, Apple, Microsoft, Alphabet, NVDA, those kind of companies. There's only 3 companies right now that are above 3 trillion, which is going to be Apple, NVIDIA, if it's still there, because NVIDIA has pulled back. No, NVIDIA is not above 3 trillion anymore. And then Microsoft, which Microsoft, I believe, yes, is still, Microsoft's at 3.16 trillion. So they kind of move around. It's amazing. Just a little bit of movement on their stock price really impacts their market cap value. So you can also think about market cap, the entire value of the company. If you wanted to write a check for that entire company, that's how much it would cost you. So be sure to check your couch cushions for some extra change on some of those. So when you look at that, so small caps and a good ETF, one would be IJR. So IJR is the iShares small cap ETF. So ETF, exchange traded fund. So that is the iShares version of that. And if you look over the last month, on July 10th, it was $106 a share, and now it's $117. But if you look at their 5-year chart, small caps really have not done a lot over the last 5 years. And there's a couple reasons for that. Small cap companies typically do worse when interest rates are higher. So they don't have as many resources. Banks charge them more to borrow money. There's all these kind of, they can't really probably self-fund a lot of things. So they have to go to the bank to look for financing. And so they just don't have as many options. So some of the core stocks in that top 10 holdings of small cap stocks, maybe some brands you would know, would be Abercrombie and Fitch, the clothing store, Comerica Bank, Robert Half International, which is a recruiting firm. Those are some of the holdings within the small cap firm. If you want a mid cap ETF, there is IJH, which is a mid cap fund. If we look at some of those holdings, let's see who's in the mid cap area that we might know. Pure Storage, Williams Sonoma, Burlington, like Burlington Coat Factory, those kind of companies, Illumina, those are in the mid cap space. So you paired that with the economic data that we have coming out that looks like the Federal Reserve is going to maybe lower interest rates in September. And so lowering interest rates is typically better for small cap stocks. It makes borrowing cheaper, and for all the reasons we just discussed. And so you start seeing money trying to flow to those areas before it actually happens, right? They're wanting to get there before they really know what's going to happen and kind of get in front of everybody, maybe front run everybody and try to move things around. And so when you look at the returns this year on those mega cap stocks, the Apples and Meta and the ones that we talk about, they've had great performance this year. So it's kind of natural that money would flow from those. We take profit from those and we put it into those small cap stocks. Now, what could prevent this rotation from truly happening would be the Fed reports this week. Are they really looking to lower interest rates? There's going to be a look for clarity on that. That's going to come out on Wednesday. And so we'll see what their verbiage is on that. Some analysts are already pricing in 3 rate drops in the next maybe by the end of the year. I don't know if that'll happen. We had the jobs number on Friday, and then we just have a slew of tech earnings this week. So we have Microsoft, Meta, Amazon, and Apple are all going to report this week, and Microsoft. And so, man, this is going to be a very important week to kind of see what direction does the market go over the next couple of months. And so when I look at it, I know that these companies have outperformed, but they're also the most profitable firms in the world by a long shot. Tesla and Google reported this previous week, and their stocks are down off of those reports. Google, the one kind of chink in their armor was that their YouTube revenue was down a little bit. And analysts are starting to get a little bit impatient from the amount of money that they're spending on AI chips and this AI infrastructure, and it's not really being reflective in their balance sheets yet. So that's another theme that we've talked about, that they're not actually making money off of that yet. Now, Google's a little bit different because their search engine, we're not paying to search, but we should see some with Microsoft and Amazon and those companies. We should see a little bit more profitability coming from that. With Apple, it's going to be more about what their future guidance is. There's going to be an announcement about their new phones. They're expected to have something called Apple Intelligence, which even though it's not out yet, the expectation is that some of the new AI features in their phone is going to drive kind of what they call a refresh cycle, where people are going to replace their phone so they can take advantage of some of that new technology. So, I look at this and it's kind of a digestion. Is the trend over? Is a true rotation going to happen? I don't really know, because when you still look at the themes and the pieces of these themes, they're still together. Companies are still going to be making this AI push. They're going to be trying to get into this space. What kind of gets in my head a little bit is there's a lot of people that I read and other money managers that I read, and I know a lot of them did not invest into a lot of these companies. And so when I'm reading them, they're talking about how these companies are overvalued and they're not going to be able to, kind of keep this up, and people aren't going to stay invested in them. And part of me is like, okay, well, do they have a good point, or are they just trying to self-rationalize to them and their clients why they didn't get into these names? And so, they're still in a natural, like a normal pullback is kind of a natural thing throughout a year. So for some people, I look at this with NVIDIA, and, NVIDIA has gone from a high of $140. Of course, this is after split numbers. So $140 down to $113, where it currently sits right now. So that is already a 19% correction for 19.2% correction for NVIDIA. So at some point, I think there will be those who wish they were in NVIDIA and look at this as a good buying opportunity. So when we look at stocks, we talk about the numbers, the fundamental numbers of a corporation, which is going to be, what are their revenue, right? Revenue is the sales, how much in sales do they have? We look at what are their expenses? What are their margins, right? These are all the numbers-based things that we look at when we do fundamental analysis. But there are also investors and traders who use technical analysis, which is basically just what has the stock been doing over the past couple of weeks, months? Does it have momentum? Is it trading above its 50-day moving average? Is it trading above its 200-day moving average? There's something called RSI, which is a relative strength index, that basically tells you if a stock is overbought or oversold. And a lot of these big mega cap tech names like Amazon, Amazon is extremely oversold. Meta, I believe, is oversold. You look at NVIDIA, getting very close to being very oversold. So a lot of these big names, that money's been pulled out of them. And so you would expect at some point, especially if their earnings are good this week, that there would be a rebound in those positions as they kind of reestablish themselves as the dominant players in the market. The only one we don't hear from that is usually a late reporter is NVIDIA. NVIDIA doesn't report their earnings until August 28th. So we have a long time to go before they report earnings. And so there's going to be a lot of data that comes out beforehand. And so, as always, when we talk on this show, we always say it's for entertainment purposes only. Talk to your financial advisor, right? But the other thing that you have to be careful of is changing strategies too often to try to kind of pick where the hot spots in the investment world are. And, it's kind of the same. It's like, think about traffic, or think about being at the grocery store, right? You pick a line at the grocery store, all of a sudden it stops moving. You look to the one next to you, it's moving. So you switch lines, and then all of a sudden the one you were in starts moving, right? Same thing happens in traffic. You switch lanes, you see those people, they're constantly weaving out of traffic, and all of a sudden you end up passing them, or you're going the same speed. So, changing directions is not always a good thing. And so it's not so much about taking advantage of everything that happens every day, but trying to find these themes, these multi-year themes, where we see this wave coming and we feel like, man, I can surf on top of that wave. And certainly the technology, these technology companies have been a good wave to surf for the last couple of years. And obviously it's not going to last forever. Is this where the trend changes or not? I'm not really sure on that. If we had a crystal ball, it would be a lot easier. But one of the things I look at is, okay, are these companies profitable? Yes, they're profitable. Are their balance sheets good? Yes, they're fantastic. I mean, those are the things that I'm constantly looking at, wanting to see. Okay, making sure I'm dealing with well-established, financially strong companies, because if the market does go bad, I want to know that I'm in a company that can ride it out. And so, after these earnings reports come out, I'm sure the white hot light will be on political stuff again, and that's another one. You got to be careful. You think you know who's going to win. You've probably been wrong before. You can be wrong again, and so you again have to be really careful and just like weighting your portfolio too far on one side because you expect somebody to get elected and then all of a sudden they don't. So all that being said is you have to have a strategy, and you have to stay disciplined, consistent. Don't get scared out of positions because all of a sudden they're just kind of trading sideways for a little bit. That sideways trading can be kind of good digestion of the gains, and you kind of get some of the momentum traders out of there. But if they come back, the stock will recover quite handily. So, you just want to be in good companies you can own for years, not companies that you can own for days. And so, will this rotation continue? I mean, only time will tell. But I think it's going to be hard for a lot of money managers to be out of these companies that are so profitable and have performed so well. That's the other thing we don't, the financial news doesn't talk about a lot is, do professionals talk stocks down so that they can get into those? So when you hear people talking about, oh, they think, whatever company's overvalued, are they at the same time buying that for their clientele so that they can move them into those stocks while everybody's out of them? And so, we'll see, but this is where diversification comes into play, not having too much of your money in any one stock. But you do have to, if you want to be better than everybody else or have better performance than everybody else, then you got to be willing to kind of do things that other people aren't going to be willing to do. And so we look at that. One of the ones I wanted to point out is 3M. So 3M company has not performed well over the last, 5 years. So 5 years ago, 3M stock, this is August 2019, would have been $135 a share. And before this week, it was 77. So not a good 5-year run for 3M. 3M, they're known for Post-it notes. That's their most number one product that everybody probably knows. But on Friday, they jumped 23% on their earnings, the best day they've had since 1980, before I was born, finally. And so they jumped handedly. They raised their annual outlook. They beat on their earnings for the first time. They have a new CEO. Looks like they're having a glimpse of a turnaround here. So we'll see, so there's names like that are doing well. You look at United Healthcare is doing well. Goldman Sachs is doing well. We talked about them a while ago when they were around 310, 320, when we talked about how, once mergers and acquisition activity came back, that was going to be good for Goldman Sachs and Morgan Stanley. So you see some of these names, some of the kind of the I'm not going to call them boring. These aren't even boring companies, but just kind of the trends that we have. Another important one this week, let me see here. I think McDonald's reports this week. So McDonald's will report tomorrow before the open, and that's going to be key to see, are people going after that $5 menu that they have. And then Tuesday is going to be Starbucks. and their last quarter was a disaster. So we'll see if that gets better. But McDonald's, some of the other fast foods, are people coming in with these kind of meal deals that they're doing? Is that bringing people in? And so we have that, and then we have the Fed and the talk of the Fed on Wednesday. Are they going to signal that they're going to lower rates in September? One of the questions was, well, if they think they're going to lower rates in September, why wouldn't they do it just now? Why wouldn't they just do it now? Well, if they lowered rates this week, that would probably, the stock market would probably drop quite handily if they did that, because they haven't signaled that. So if they were to lower rates now, that would mean that there's something bad with the economy. They think that the economy is deteriorating at a very fast pace, and that they need to do something immediately, which would not be taken well by the market. They would be kind of maybe that just create a lot of nervousness. So we'll see. We'll check in next week. I'm gonna try to get Cameron back on here next week. We'll do a maybe a recap of all the things going on this week. But yeah, busy week for the market, busy week for your portfolio. But if there's been some of these names that you wanted to get into, you can use some of this weakness to make that happen. I mean, Amazon's gone from 200 back down to 182. I mean, there's been a little bit of movement here that could allow you to get in. And of course, NVIDIA going from 140 to 113. It's the weakest it's been for a while. AMD's up there as well as far as weakness is concerned. So we'll see how long it lasts. All right. Well, as always, don't mistake activity for achievement, and I'll see you next time. Thanks, everybody.